Hello guys, today I'm going to teach you the best way to analyze market and 5 important trading checklists that you need to mark before you enter any trade. These things are very important. If you don't have them, at least make sure 4 of them are marked before you enter any trade. The first thing is timing. When you have your timing right, let's say you are trading something that has correlation with like GBP USD, GBP is Great Britain pound versus USD. You are not expected to be trading it during Asian session. It's supposed to be traded during during London session and New York session because they are American peers and Great Britain peers. Then when you are trading something like German 40, NASDAQ, German 40 or German 30, you need to be trading it during London session. And everything should be closed by New York session. And NASDAQ is majorly traded when you have the most volatility is during New York session. So when you know your timing right, you are good to go. Market structure, you need to know the market structure, how the market moves. You know the market does not move in a straight line. You need to know how in the past, how the market has been going up, down. You know this market is trending up. The market, you cannot tell me the market has been trending up from this place to come up like this. And for you to know that the market has been trading up, this high was broken up. Let me remove this. And this one also was going up. This one went up. This is the low that forms this high. So once you know the market structure, this is the low that forms this high. This is the low that forms this high. Once you have identified the trend, the market structure, you know that whatever you are looking for is buying. Then once that is settled, the next thing you should be looking at is pricing. What's the best price to enter? You cannot just see that the market is going up from this side and you just jump in to start entering into the market. What's the best price to enter the market? Price level to enter the market. The market has been going up like this, and you see the market is up like this, you want to start joining. No, the market doesn't go that way. Wait for it to retrace, to have a little retracement downward, minimum 50% retracement. But mostly what I do is 75% retracement. It's better to have that because when you are going to place your stop loss, it shouldn't be a big margin. When you are doing 75% retracement, if the market is going back up, at least if it is going to get to this level, and you enter at 75% retracement around here. So if your stop loss is below here, if you enter at 75% retracement, if your stop loss is below here, slightly below here, at least before it gets to this place, your risk to reward ratio will be at least 1 to 3. So that's one of the things, pricing. Then confluences. And under the pricing, there are a lot of things. You don't just go and say because the market is retracing, because it's in 75% retracement, you want to enter. There are things that we look out for. There are steps, there are tracks that the market movers, they left before the market starts moving up. Those are what we call PDRAs. PDRAs. If you know this, they are 7 in number. There are 7 in number. Under PDRA, we have order block, breaker block, fair value gap, mitigation block, liquidity void. You have all of them like that. There are 7 in number. Anywhere you are going to enter the market, you need to see all those traces. They will need to leave a trace behind before they move. And once you know your pricing very well, there is what we call confluences. Confluences is when you see your technical analysis. Your technical analysis is, you know the structure, you know the best price to enter the market, and you see your PDRs there, and your fundamental tells you buy, then those confluences are there. Your PDRs is there. Your retracement is around 75% retracement, and you have your PDRs. And at times the PDRA, there will be confluence around the PDRA that will be left behind. At times, some PDRAs, 3 of them will be gathered in one place. That's a hot spot. And lastly, when you see your candlestick anatomy, you need to know the meaning of each candlestick. You don't need to cram the name. What you should know is that there is a momentum candle, there is indecision candle, and there is rejection candle. When the market is going towards a zone where the market is going to be retraced, it's going to be giving you some indecision candle, small candle. These are momentum candle. These are momentum candle. These are momentum candle, but these are indecision. It will start reducing in price. This one is retracement. That's rejection candle. This is rejection. It's giving you something rejection. This is rejection. You need to know them very well. This is indecision, and we have engulfing, bearish engulfing. You need to know the structure of candle. Don't cram the name, and some people tell you this is Twitter, this is Morningstar, this is Hammer. Know the characteristics. It's better to know the characteristics than the name. The name doesn't matter most. Is what matters most. If you see this kind of candle, what does it mean? If you see this kind of candle around your zone, it means the market has rejected, the bullish pressure has rejected downward, so it's going to drop. When you see this one in your zone, you see that the bearish rejection, the bearish pressure has reduced and is going back up. And it comes down again, it gives you this, so you know you are going up. Then when you have all this, let me show you how I use all of them. Timing, market structure, pricing, confluences, that's your technical and fundamental, and candlestick anatomy. I want to see at least minimum 2 to 3 PDRA in one zone when around 75% retracement level. Let's show this, how I would have entered this market. My Fibonacci retracement. This is my buying zone. This is the first confluence. This is my first confluence. Let's remove that. My first confluence. Let's look for PDRA. This is my order block. That's second confluence. Under PDRA again, we have a mitigation block around here. It still fall inside the 75% retracement. This mitigation block around here. And you have a fair value gap around here, which is still within the area. And you now have a rejection candle and bullish engulfing around here. So be as it may, if I were you, I would have entered. You have many confluences here. So I will enter here. My first take profit will be here. This is ratio 1 to 5. This is how I enter my trade daily. I don't joke with all this. If you know you want to learn more about how I do my analysis, you can join my mentorship class. These are conference area. You don't joke with it. You don't joke with it. Let me go backward to show you some of the areas where I do my analysis in before that we have big confluence, where those confluences played out, and you don't joke with it. When you see such things, you don't joke with it. You don't joke with it. Let's see. Let's go backward. I'm going to show you another confluence. Okay. Let's see this. The market has been going up. The market has been going up, and this one give you this. Let's see. This one, the market structure, this one breaks this high. The market is start to be going up. You have your order block here. You have your fair value gap here. Let's see, 75% retracement. You have it at the same area. And you now have your candlestick rejection. Once you have your candlestick rejection there, like me, my entry would have been there. My stop loss will be slightly below this candle. Then my first take profit will be here. My first take profit will be here, which is 1 to 2, but the second take profit will be here, and my last take profit will be around 200 retracement level. This is my last take profit. So let's see. First take profit, second take profit, and last take profit. Little before it gets there. So this is how I do my analysis every time. This is how I do my analysis. If anybody is interested in joining my mentorship class, chat me, and I'm going to tell you how we do our analysis every day. My student knows how I drop my analysis every day. We don't joke. We don't joke. If you do this 10 times, you are going to win minimum 6 to 8 times. And any of the trade that I enter is going to give me minimum 1 to 3 risk reward ratio. If I lose any trade, I'm not scared. It's part of the game. But any trade I win, I'm winning minimum 3% of what I risk. And if I do it 10 times, I'm going to win minimum 6 to 8 times. So me losing trade is not a big deal to me. It's not a big deal to me. Once I have my checklist and my checklist is in place, I see all the conferences, I see this within my timing range, market structure is okay, and candlesticks give me confirmation I'm in it. It goes in my favor or it doesn't go in my favor, it's not my problem. I've done the analysis. It doesn't change my psychology, it doesn't change anything. Nothing changes. I just play it according to the way it's supposed to be, and I'm good to go. This one now, I'm expecting 1 to 5. 1 to 5. That's what I'm expecting. If it goes against me, so be it. But if it's in my favor, I'm going to wait for it at this level, which is my first take profit. My first take profit there is 1 to 5. So what else am I looking for? What else am I looking for? 1 to 5. If I'm risking 1% of my capital, I'm getting 5. And if this will be my second take profit level, but the market might not get there today. So if the market is, if there's news release, this will be my last take profit for that day. So you see how I do my analysis every day. So if anybody has any question or anything, chat me. I'm going to reply you. Thank you. God bless.